Hope everybody had a great weekend. I'm doing an update here. It's Sunday afternoon, evening. I want to touch on global macro, and then I'll come back with another video on crypto. More of the same game plan. I think the most important thing here as we open up Sunday night into London trading here on Monday is obviously where futures are going to kind of play out. We're testing the major highs from December, and November highs are just above the market. If we look at the Russell, this is only the second time I've gone to the short side of the Russell. I've been pretty patient. And I'm going to give it a little bit of room here around the 1600 area. We are kind of we closed right at it, so we could open up above it. I'm still thinking that it's possible the market tries to run some stops here, create the most amount of pain for the shorts, and then maybe we actually finally do make a longer term lower high. So that said, I mean, we're slowly putting out the longer term shorts, but we still need to be aggressive on the day trade. Buying the Dow is how we've been playing it. There's plenty of reasons to buy the dip intraday, swing trade when we get the pullbacks, and that just helps obviously make some money near term while this market's been in an intermediate term uptrend. A little bit harder to see with all our buys and sells, but we did buy. My last two buys were pretty well here. This was, I think, Thursday, late in the day. Bought again here Friday. So I'll show you on the other chart. So for the major indices, the Dow coming into this week is going to be huge. This is the weekly chart. We're 1, 2, 3, 4, 5, 6, 7. This is 9 weeks up. So there's an 8.6 frequency in cycles that the global economy, global business cycle is 8.6 years. So many things revolving around pi and just the derivatives of pi in nature and in math and all the things that we talk about is on an 8.6 frequency. So the rally 8 and 9 weeks off a high with really no down weeks. Pretty amazing run. And we'll see from a timing perspective if we're finally due to roll over. So we need to watch these levels again. December's highs are right here. This is the November highs in the Dow. And then obviously you have the all-time high. That's not out of the question either. So this entire rally, we've been playing the long Dow futures. And then the Russell and the Nasdaq. The Nasdaq we've actually shorted a little bit more frequently than the Russell. Again, I only went to the Russell as of late. Nasdaq, I'm still a tad short, but I've been more willing to cover quicker and more often. So all these have been all my covers on the Nasdaq. So we've been shorting 54s, 56s, 69s into the 70s. And again, we're just at major levels here. So it's going to be a really interesting week for the markets and for risk management. If we start to get weekly and monthly closes above these highs, then you got to start thinking about a retest of the all-time highs, which again, that's going to mean hedging some of our VIX longs. That's going to mean being more aggressive on the long side of the Dow. We did buy upside calls on S&P futures to help with that in case we did get that move. We can see we're right there on S&Ps. The way we've been playing it, I have some longer term puts I put out to June last week. There's really good risk reward there with the implied vol being very low for those types of trades. And then I haven't really shorted the futures at all, so I've just been waiting. I've expressed anything short via the Nasdaq and small on the Russell. I haven't done anything in S&Ps, but I did buy some like 2,800 calls by 2,300 vertical spread in case we run the stops and push through this 2,800. So there are a lot of China headlines. There's a lot of news headlines that are trying to push this market. We really need to watch 2,800 and then all the other highs that I talked about. And I think those are the biggest levels. I mean, the euro, everything else, global macro, euro and the dollar has been very sideways. Nothing really has been trending. we've been playing the same risk off setup in Aussie yen, and just like the market hasn't backed off. At least you can see here in Aussie versus the yen, we've been bullish the yen, we've been fading the Aussie. At least this has gone sideways, whereas obviously the rally in stocks has been very ascending and much more momentous, and has angle and distance. So if we do finally have a risk-off move and stocks back off globally, then I would expect to see this Aussie yen chart roll over also. And depending on how hard things were sell off in the equity space, you may actually get below 77. So we're still playing that core short. That hasn't been anything to write home about. It's just we haven't really gone anywhere. It's been very sideways, a lot of chop. Still like the gold market on the long side. It's been a little bit crowded. It's probably been a little bit crowded from a positioning standpoint on the long side, so I'm not surprised that the market kind of backed off last week. You're also pushing right in front of that 1350, 1360 area. So we did get a topping tail at the end of this big move. And I still think there might be some more weakness and a little bit more of a pullback big picture as the weekly cycle's high. But we want to use these pullbacks as opportunities to buy. So if you keep a smaller core short or using options, when we get knocked down hard, there's plenty of opportunities to buy intraday. It's pretty much the same trade in bonds. You've had a couple of these sell-offs where it lasts 1-2 days and then just comes right back up. So we were watching 147 and 30s, trying to trade it around. We made some pretty good sales up and around that area. So I still think, we're better buyers of treasuries. I'm long some 10s. I'll buy 30s. I cut a little bit of risk here in front of the weekend just to free up some buying power because what I wanted to do in equities. But I still like a core long in bonds. You got to watch 147. We get through there, then we can retest basically right in front of 149, no problem. And then the other side of that, we like to trade the curve around and leg into the curve. So we'll sell some 5s on strength. It was okay place. The first place to sell was 114.23, and we backed off of that level. I was kind of thinking more towards the top of the range, like 28. But when we get overbought in bonds, I like selling 5s against being long 10s or 30s. What else? Without getting too much into commodities, I mean, I think that's pretty much clear what we want to do. Big week in equities. Dollar's been pretty sideways. We'll see if we get some more strength there. It just depends on what this global risk off, risk on trade, whether it's going to play out or not. So we'll keep you guys updated. I'll come back with a crypto update. Oh, and also it's Sunday this afternoon. Hopefully some of you saw the update I did, but I'm running a flash sale, and I knocked down all of our trading courses, guys, are 50% off through the weekend. I might run it into Monday, but just in case some of you weren't aware. That's why I want to get this video out. But the trading room is half off. We're trading together live every day. I don't know where else you can get that for $100 a month. Forex courses. I mean, I've paid tens of thousands of dollars to learn to trade Forex. It doesn't get any cheaper than that. That's 3 hours. That's a good intro to Forex. So some of you I know on the crypto side that wanted to learn that. Or even if you don't, just in general, that's another market you want to learn to trade. This is a great, I set you up on how to get started the best way, I think, what's most important. I give you some setups that work really well. And then my trading courses here, that's half off. This is the trading course with the options that we use, the ratio back spreads and the hedging strategies. And then the coaching is, I've never run that price before that. Anything below 2,000 for our group coaching and being a part of that elite group. So that's there, guys. Take advantage of it, and see some of you in the morning.